All right, welcome to the channel, Stonk Insights. We have a special guest with us today, Donald McIntyre. He's been on the channel before. He introduced himself before. If you want to quickly introduce yourself again, to the new folks that came onto the channel, I would appreciate that.
Yeah, of course. Thank you very much for having me, Stonk Insights. I'm Donald McIntyre. I am senior editor at the ETC Cooperative. And I write articles and produce videos for the etccooperative.org website and also the ethereumclassic.org community website. Before my early career, I was a banker. I worked for UBS Securities and then Morgan Stanley. And then I became an entrepreneur, a tech entrepreneur, and I started two companies in the fintech sector. And in 2012, I heard about Bitcoin first. And then in 2013, I started to dedicate time in the crypto industry. In 2014, I participated in the Ethereum community during the process of building it, and then in the launch in 2015. And then in 2016, I was against the hard fork. And by 2018, I started to work full-time for Ethereum Classic, first at the ETC Dev, which was the developer team, the core developer team at the time. Then for Etherplan, my blog and YouTube channel, where I produced a lot of content about Ethereum Classic. And now I'm working for the ETC Cooperative as senior editor.
Very nice. Yeah, and I've seen that. And that's, you took us throughout the years. It's been about 2 years since me and you last talked. So, a good chunk of that has been, in the last 2 years. And I actually, took down some notes here. The very first note that I had here was Donald McIntyre used to be a financial advisor, and you hear all these YouTubers say, oh, I'm not a financial advisor. This is not financial advisor. It was like, hey, he actually used to be this, but none of you guys are paying him. So nothing in this video is considered financial advice. So I do want to talk about some of the things that I guess just recently happened, especially, I guess in the last 48 hours with, I guess the Silvergate. I won't call it collapse yet because not enough information has been put out about it, but we have seen that crypto has been affected by it. It took like a small little 5% dive as far as Bitcoin and other altcoins, a little bit more. What do you think about these centralized exchanges and, the cascading collapses that's been happening that we've been seeing? It's been causing this catastrophe across the crypto, sphere.
The first thing that I think is important to know is that to differentiate what are the networks themselves, the blockchains like Bitcoin, Ethereum Classic, Litecoin, Monero, Ethereum, and the startups and the companies, the traditional companies that work on top of these networks. So all these crises of FTX and this latest one and what the SEC is trying to do, shutting down staking pools in Ethereum by imposing a fine on Kraken, and now they're harassing Coinbase. It's all outside of the blockchain, so it doesn't affect the technologies, it doesn't affect the security of the addresses, the assets that you may have, the dApps. Those dApps are immutable, especially in the proof of work blockchains. And the larger ones, they are immutable and they are safe as long as you control your private keys through your 12 or 24 word passphrase. You have Metamask or Exodus or Ledger or Trezor, you're going to be fine. The problem is when you start using these services like the exchanges, well, they are just normal corporations, no? And they can go broke. And everybody who had their deposits, their crypto there with them, they don't have their private keys and their addresses directly controlling their assets. They really delegated that and they gave them to these companies, hedge funds, etc. And if they go broke or they commit fraud, then you are the victim of traditional fraud, but that has nothing to do with the blockchains. It's two separate things. A lot of people, when I talk in conversations or socially and I tell them, yes, I work in the crypto industry, they say, oh, FTX. Sometimes they tell me Bitcoin went broke. No, it's not Bitcoin. It's not Bitcoin. It's a different entity. It's totally outside of the blockchain. The second thing I would say, taking this into consideration, is to, as much as possible, try to have your crypto assets, if you own Bitcoin, Ethereum Classic, Litecoin, or even NFTs, or if you have baking coins, any kind of asset inside a blockchain or in a smart contract, try to separate them from these centralized providers like exchanges and funds and things like that, and move them to wallets that are non-custodial wallets, where you own the private key, so you have control of your addresses directly in the blockchains, instead of delegating or having your assets be owned or controlled by these entities.
Very good. And you make a good point. Just similar to like how Wells Fargo, they were a bank, but when they started doing bad things, that was corruption. They didn't say the entire banking system was a fraud, even though it may be, but they didn't classify the entire banking system as being a fraud. So it's the same instance with FTX. FTX, the entity, they were fraudulent. It has nothing to do with Bitcoin or Ethereum Classic or Ethereum. Is Sam Bankman-Fried, and his whole organization, that he was a criminal in that instance. It had nothing to do with Bitcoin.
They could have done that in the commodities market, in the stock market. It has nothing to do with crypto itself. The blockchains and the networks are, if they're well designed and they have good security, digamos, assumptions and designs, like especially the proof of work blockchains, they are exactly the same as before. Bitcoin has been working on Ethereum Classic for years, and in decades from now, they're going to continue to be existing and working, and everything is going to be intact and immutable.
Right.
It's what you mentioned, Bank of America. Yes, what's happening. That's another thing that I noticed. People, for some reason, they become more alarmed when it happens in the crypto industry, but in the traditional market, banks fail all the time. And also this systemic kind of thing, because banks, like crypto exchanges, they trade between themselves. So when one goes under, the others also lose money because they had assets inside those. They all have cross links with lending agreements and things like that. Like when FTX went under, then Genesis lost money, and then because of Genesis, then the other one, what's the name of the other one?
We had Luna, the Celsius, the Voyager,
and then the third one, the one that belongs to the Winklevoss.
the Gemini.
Yeah. Then Gemini had money with Genesis.
Yep. And
so it's a chain. That's a typical chain, and that's normal. When Lehman went under and Bear Stearns went under in 2008, 2009, it also created a chain effect, and many other institutions went broke because they all had cross contracts between themselves and liabilities and assets and liabilities.
Yeah, that's
normal.
Yeah, I was going to just state, that's a very, very, very good point. The normality of that, and being in the crypto industry, we have far less liquidity than these banking industries. So when one major, one thing topples, then it's going to create this contagion effect. It's going to, go down the line and, get everyone until, it stops, I didn't have this on my list here of questions, but I guess, we're kind of going this way. How would you compare what's happening now to what happened when Mt. Gox collapsed? Because in my, just from me looking at it, it seemed like that collapse was bigger because that was the only, exchange of its type, as now we have the Coinbase, we have Binance. If Coinbase went down, then we still have Binance. We still have something. And Mt. Gox was pretty much it, during that time frame.
Yeah. Absolutely. Yeah, no, the Mt. Gox, in relative terms, the Mt. Gox crisis when it went under in 2014. I think they people lost 750,000 bitcoins. That's a large amount of bitcoins, and the issuance of Bitcoin at the time was, I don't remember, but 14, 15, 16 million or 12, 13 million Bitcoin. So it was a huge share of the stock of Bitcoin, and in effect, it affected. I even lost half a Bitcoin there because I was testing it, how it worked, etc.
Right.
Everybody lost money there, and it was a huge amount. And today, if you multiply 750,000 Bitcoins by 23 or 22,000, you can see the magnitude. I don't know what number it is, but it's a huge amount. So for me, when they were talking about FTX, for example, that it was $35 billion, it wasn't that much. It wasn't that much for a financial industry that is worth $1 trillion, and it wasn't that much compared to normal financial crisis. It's not even a financial crisis. It's more of a psychological panic and herd effect than the real material effect. And I'm not minimizing the fact that individuals did lose, no? Families and individuals and humans like you and me lost money with FTX. It doesn't matter the size, if it's billions of dollars or millions of dollars. When you lose your financial well-being, of course, it's a catastrophe, no?
Absolutely.
For individuals. But on a systemic basis, it's not very big, really.
Absolutely. Okay, so this first question, this is taken from, and I'm going to be leaving some links down in the description down below. This is going to be going to YouTube, so you guys can go directly to the source, so you can look over Mr. McIntyre's material. Or I say McIntyre. Am I saying your last name right when I say that?
Yeah. McIntyre.
Oh, McIntyre. Okay. So when I look over, so everyone can look over his material, so you can see, exactly what we're talking about. Very fascinating. He put everything together so well. It makes it easy for the average layperson to go there and look at it and, not get lost in the weeds. So I applaud you for doing that.
Thank you.
So this first question is from something that you recently put out, in classifying Ethereum Classic as a commodity and Ethereum as a security. Okay. I guess this is the first general question, and this is for, I guess, the average person coming into crypto or into stocks or anything in general. Why is it important to classify Ethereum Classic or any crypto as a commodity as opposed to a security? I don't think people really understand, the importance of that. I think it goes under the weeds of why you would want to do that in the first place.
That's an excellent question. Excellent question that nobody asked me. Everybody is focused on whether it's a commodity or a security, because everybody assumes that if it's classified as a security, then it's bad. And if it's classified as a commodity, then it's good. But nobody asked this question that you asked. Why? Why is it that? The reason is that if an asset is classified as a security, then it is not a commodity and it's not currency. Therefore, it has a different legal status in a nation or an economy. No, you cannot declare it, for example, as legal tender and as a coin to be used together with the dollar in the economy. So it would reduce its demand. That's one problem. The other problem is that if it's classified as a security, only people who are licensed and entities who are regulated and licensed can deal in the asset, and it falls under all the restrictions of stocks, bonds, mutual funds, and things like that. No, you have to be a qualified investor for certain kinds of investments, or if anyone wants to distribute cryptocurrencies and they're all securities, they have to be licensed advisors, like I was before, or stockbrokers and things like that. So it more or less reduces the scope and the usefulness of the assets if they are classified as securities. So, and this is another thing that is important, just as I differentiated the companies and the startups and the centralized entities that work on cryptocurrencies, that they may go broke, and that it's not good to have your money with them. It's better to have your money directly inside the blockchain, and that you have to separate the concept of blockchain and these companies. You also have to separate these legal interpretations with the blockchains. In the end, if Bitcoin or Ethereum Classic are classified as securities, which would be the least desirable outcome, because it would reduce their potential as currencies, as legal tender in the future, and it would reduce the amount of dealers, and it would centralize everything in the banking industry, because the banking industry would be the only authorized to deal in these assets, because the banking sector, especially investment banks and brokers, are the only ones who can deal in securities, and would give the whole industry to these centralized these centralized trusted third parties that we're trying to avoid in the first place. All this is external to the blockchains. From the perspective of Bitcoin and Ethereum Classic, or Litecoin, the proof of work blockchains, especially because proof of stake is centralized as well, pretty centralized as well. ETC, it doesn't affect Ethereum Classic in any way, whether it's legally categorized as a commodity or as a security, because it's still a global network, permissionless, censorship resistant. Anybody can use it as long as they have an internet connection. Anybody can run a node, anybody can mine it, and anybody can be a developer and go to GitHub and see the code and contribute to the code, and if they have good ideas, they're going to be accepted. So nothing changes in the real day-to-day operation of the network. What changes is the legal status in that jurisdiction, for example, within the United States, and the people of the United States would maybe have more hurdles to be able to deal with cryptocurrencies. That's the only change.
Right. And I seen your or listened to your ETC radio from yesterday, and you made a very good point that even if the SEC were to classify Ethereum Classic as a security, who gets sued? What happens? There's no centralized body to sue, which in itself, should satisfy the Howey test, because there's no body to actually go after.
Exactly. That's an excellent point. If we go to Avalanche, Polkadot, Cardano, and even Ethereum, and there's a case that the U.S. government starts saying, okay, you are a security, you never registered, and you sold this and you promoted it within investors, and therefore now you have to pay a penalty, just like EOS, the company that organized the whole thing of that network, EOS, they had to pay $25 million to the SEC,
right,
as a fine. In the case of the others that I mentioned, Cardano, Polkadot, Ethereum, Avalanche, Tezos, there is an entity that you can go and is responsible for everything that happened. They have the liability in that case, and they can find them and they can arrest them if there's a case, or they can fine them. In the case of Ethereum Classic, who are you going to get? Nobody. There's no entity, just like Bitcoin, there's no entity that is responsible for Ethereum Classic, because it's a truly decentralized system. And the fact that the SEC and the US government could not go and find someone in particular, or arrest them, or declare them responsible for ETC, is the proof that it's a commodity, because there's no others or central party that is responsible for the project.
Very nice, yeah, and that's exactly what I said. I'm actually on record. Last year, very early last year, I was a part of a podcast. They were talking about cryptocurrency, I guess in an urban environment. But they were talking about the Ethereum upgrade and how it's going to be this marvel and how it's going to be so great. And I remember saying on that podcast that the Ethereum upgrade in my opinion, is going to be known as being one of the greatest tragedies in crypto history, with them going to proof of stake,
I totally agree.
Yeah.
I agree with you, and I call it collective suicide. Imagine that the most important invention by Satoshi Nakamoto and the whole industry is proof of work, because proof of work really produces the decentralization, and they take it away and they put some other system that copies basically how the banking system works.
Right.
I mean, it's like going back in time.
Doesn't help anything. Yeah. Now, with these regulatory initiatives that are being discussed and being implemented and whatnot, do you think, I mean, it's sounding like proof of stake, currencies, cryptocurrencies may be classified as securities. No one can say that for sure. That's where they're pushing towards. If that's the case, and they, let's say simultaneously they say that proof of work cryptocurrencies aren't securities, that they are commodities. What do you think that's gonna, what do you think in the short term to long term is gonna happen as far as Ethereum versus Ethereum Classic, if that were to play out?
The question is, what would happen if the proof of stake networks are declared securities and the proof of work networks are declared commodities?
Correct. Yes.
That would prove that the proof of stake networks are centralized, because only financial institutions are going to be staking entities there. The staking pools are going to be like it is now. No, when Ethereum started to be migrated to proof of stake, the large exchanges were the main staking pools, and then you had two what they call decentralized staking pools that are not decentralized. Several reasons. I actually wrote an article about that. And they control the whole staking segment, and 70% of the network was censored at one point because of how centralized these entities are, how easy to find they are. They are static because they have fixed amounts of money stuck inside the blockchain in certain accounts, so they're easy to identify, to go and get by authority. So they started to comply spontaneously by their own will to censor blocks. Because that was the advice by their lawyers. I lost. What was the question again?
Yeah, so I mean, you pretty much answered it, but I was asking, with if Ethereum is actually classified as a security and Ethereum Classic is classified as a commodity. Well, let me just push it further. Do you think for someone who's holding Ethereum Classic, do you think this is will be bullish in any term for Ethereum Classic?
Yeah. So I was explaining this because I was using that as a proof that the proof of stake is centralized. So if proof of stake is classified as a security and the proof of work as a commodity, then the ones that are commodities are going to go up, because they're going to be much more free and they're going to have a much bigger scope in the future.
Right.
For future usefulness, for future functions, for example, they're going to be, as gold can be considered a currency, because it has been historically a currency, then ETC, Bitcoin, Litecoin can be considered currencies in many countries in the world, like it's already in El Salvador. Whereas a security is basically a centralized, as a contract between a centralized group that is responsible for its value and things like that. So it would really differentiate the two groups, and it would truly differentiate. It would be a truth, because for now a lot of people are confused, thinking that any of these things, when they see them in CoinMarketCap, they're exactly the same thing, because it's a list, and you have from stable coins to ERC20 tokens to Bitcoin to ETC to Ethereum to Cardano, Polkadot, and they're all totally different. I mean, the fact that big group is proof of stake and the other group is proof of work is already a difference.
Right.
That some are native coins and others are ERC20 tokens is another huge difference. So people don't differentiate. So it would be great if that happened.
Absolutely. Yeah, I agree. All right, so I'm going to kind of shift gears here. I'm a student of your Ethereum Classic courses that you put out on the Foundation org. So course 11 was Ethereum Classic social and physical layer security. You know, it was breaking down both, you know, it really detailed the complete security model of Ethereum Classic from both the social and the physical layer aspects of it. It didn't only highlight the pros of both models, but it also highlighted and shined, you know, the inherent problems with both models, which is important to understand for, you know, solutions to be found, you know, within those problems. You talked about the social layer attacks and defense mechanisms, and I think a very good example that, you know, you didn't use in this article, but we could all, you know, pull upon is the example where Charles Hoskinson wanted to propose a treasury, and through that social layer attack and defense mechanism, it was, you know, deemed as being a decentralized thing, and, you know, was rejected. So with that same type of thought process, do you think the mechanism worked when it came to the discussions with SHA-3?
If that was an attack?
Well, not as an attack, but, you know, the SHA-3, it was a very, very heated discussion. I watched the whole blog.
Years.
Yeah, for years. I've only caught up with it, you know, very recently, and I could see the passion, you know, with you, and I don't know the other actors' names, but I could hear it, you know, people were passionate from, you know, Ronan. Yeah, very, very, very important name. But, you know, you can hear the passion, you know. You know, Ronan wants to keep it, you know, in the hands of the people. He believes that going to SHA-3, making it, you know, ASIC specific is going to be centralized, I guess. I think the SHA-3 is a, you know, wonderful thing, so I really can't call it. But do you think, because when I look at the social layer attacks and defense mechanisms, you know, from Ronan's perspective, I think that he believes that he did the correct defense mechanism in protecting Ethereum Classic. Yep. So in your opinion, do you believe that the correct defense mechanism, if you even call that, you know, happened when it came to SHA-3, you know, in discussions with it?
That's a very interesting and complex issue, because what happened, the ETC has the ETC hash mining algorithm now. Mm-hmm. And before it had the ETH hash, the normal ETH hash mining algorithm that was the original hashing algorithm of Ethereum, no? Because before, Ethereum Classic and Ethereum were one chain, and they both had the same mining algorithm, and when they separated, both had the same mining algorithm. And the reason why ETC changed to ETC hash was to implement some changes so that smaller machines, smaller GPUs could also mine ETC, you know, because the DAG was getting very big, and this, what it did, it reduced the DAG, and it's also reduced the growth of the DAG. So now older machines and older GPUs could mine ETC. This was to increase the computing power dedicated to ETC, and it was successful. It was part of the success of defending ETC from 51% attacks that happened in 2020. So in a way, the change from one mining algorithm to the other mining algorithm had already occurred, and the reason for the change was to defend the network, not to attack the network, to defend the network from 51% attacks. SHA-3 was born exactly with the same idea, because there were attacks in January of 2019, and one of the ways of defending ETC from being attacked was by changing the mining algorithm to be different, totally different than the Ethereum's mining algorithm, because Ethereum was big and had a big computing base using exactly the same mining algorithm, and if only a little portion of that would be dedicated to ETC to attack it, it would be able to perform 51% attacks. So one of the main strategies in the blockchain industry to defend yourself from attacks from larger computing bases, from larger blockchains that or larger miners who can come to your blockchain just to perform a 51% attack is to be the only one in a specific mining algorithm. And because nobody uses the SHA-3 mining algorithm, and because SHA-3 is a pure cryptographic function, clean with no additives like a DAG and things like that to make it complicated, because the Ethereum ETH hash is a complicated or convoluted, not clean like Bitcoin that uses SHA-253, or if ETC were to use SHA-3, because they did it on purpose more complicated, so that they at some point they could migrate to proof of stake, no, by implementing the difficulty bomb, etc. Bueno, sorry for the long story.
No,
But
that's good.
the SHA-3 started as a defense mechanism, so it wasn't really an attack. And I am still in favor of SHA-3, to migrate to SHA-3, because ETC hash is a complicated, it's not a standardized, well-known, tested, and institutionalized hashing algorithm like SHA-3. And most banks in the world and corporations, etc., for regulatory compliance, they use systems. They need to use standardized cryptography, not cryptography that was made up just to move from proof of work to proof of stake by Ethereum. And that's one of the benefits. The other benefit is that because it's so efficient, the hash rate would go up significantly, really protecting ETC. And on top of that, the whole purpose of ETH hash and ETC and ETC hash, or ETH hash and ETC hash, it was also to minimize ASICs, like you said, and to let people mine ETC and Ethereum when Ethereum was proof of work with normal GPUs. So they could go just to buy a GPU locally in their local store and start mining. A mining rig that is with ASICs is more specialized, and they have to buy it from professional, bigger providers, and they're not that available, etc. The thing is that today, in the end, the majority of mining in ETC is already with ASICs. I actually wrote an article that is going to be published soon, where I bought an ASIC from iPolo. I'm going to do one from Bitmain, and I started mining ETC with an ASIC. So in the end, the protection that ETC hash and ETH hash provided didn't exist, because people are mining today with ASICs.
It's true. Very true.
So the answer is, it wasn't an attack, but I, agree with the posture of Ronin. I don't agree with his assumption that migrating to SHA-3 would centralize anything, because it's already, if that were the case, ASICs already exist in ETC and are the main mining method. So the whole decentralization and let's protect the small guy and all that is not true, with ETC hash either. But the attitude of adopting a very strong position and arguing against any change, I admire that. And I was one of the first to say there's no consensus, therefore SHA-3 is not gonna be implemented, even though I was in favor of SHA-3.
All right.
Because I consider more important this in a way like immune system, where we go against changes. Respect that when that happens.
Right.
People rebel against changes.
Right on. Thank you for that answer too. So I'm done with my list of questions here. I do have one. Well, I got two other questions for you. One is community related, but this is a question I have. When you think about the entirety of the Ethereum ecosystem, is there one particular dApp that you think that would benefit the Ethereum Classic ecosystem if they were to port it over, that it would have like an outstanding improvement with the Ethereum Classic ecosystem?
Well, the big brand dApps like OpenC, the market, and then Uniswap as a swap, as an exchange, a decentralized exchange. So yes, even the wallets, if MetaMask would say, okay, now we support both Ethereum and Ethereum Classic, this thing, because now you can use Ethereum Classic with MetaMask, but you have to configure it manually, etc.
Yeah.
MetaMask, you open it and it's already Ethereum.
Right.
And many other wallets are Ethereum, Bitcoin, Ethereum Classic. They're already set from the beginning by default for several blockchains. But MetaMask, that has more than 30 million users, one day says we support ETC by default. That would be great. So in terms of market, this is external to the blockchain. No? Instead of demand and market and distribution channels, these big brands, if they would also use, I think they're going to, in the end, also use ETC. I'm going to tell you why in a minute. But if they would, announce and start, moving part of their components to ETC, that would be a great marketing impact for ETC.
Oh yeah, it just takes one big announcement. You're right.
Yeah, OpenC for as a market, that would be good. An efficient market is very important for NFTs. But I would say that there's something even more important. What is more important is for NFTs as a technology to exist inside ETC, that they already exist. And
Yes, sir.
swap market to exist inside ETC that already exist, like I think it's ETC swap is one and Hibi swap is the other one. For this infrastructure to already exist, decentralized exchanges, NFTs, ERC20 tokens, all the infrastructure that already exists in Ethereum also exists in ETC. That's very important because in the future, ETC is going to be used as property registry, and as property registry for real estate, corporations, and things like that. Cars, boats, ships, pallets, or containers moving from one place to the other. All of that is going to be represented as NFTs inside Ethereum Classic. So we need the NFT technology. So now everybody's using to trade images, but the technology is extremely important to represent real world assets inside the blockchain. And of course, you need an NFT market to make the exchanges for people to buy and sell real estate represented as NFTs. Then a market like OpenC is very important, no? An efficient market. And when you have ERC20 tokens already exist in ETC. When you have ERC20 tokens and you need to change them for other ERC20 tokens or the native currency or other assets, it's important to have decentralized exchanges so anybody can use them without barriers, without friction. So that is very important to have the infrastructure itself. If the brands come, the big brands come, that would be even better. Now, why are the big brands going to come? Because for now, the way the blockchain industry is working is that whatever you have Bitcoin, and then you have Lightning Network, and then you have the wallets on top, and whatever dApps or applications are on top of Bitcoin, and that's a separate industry, like a separate silo, a separate bubble in the industry. Then you have Ethereum and NFTs and OpenC and Shiba Coin and Uniswap and all the lending dApps and all that is another bubble. You don't touch the Ethereum bubble doesn't touch the Bitcoin bubble.
Right.
And then in ETC you have another bubble when you have ETC, NFTs, swaps, ERC20 tokens, all the new technologies there, but it's another bubble there that doesn't touch Ethereum and doesn't touch. So everything is isolated. And the same thing with Solana and Cardano. They all have their isolated bubbles, but in the future, the industry is going to integrate much more and it's going to organize in layers. More or less like when you put oil in water, that the oil goes on top and the water remains below.
All right.
The water is heavier, so it's the base layer. it's more secure, and the oil is on top, which is more for, let's say, daily use. So that's going to be how the blockchain industry is going to be organized. The proof of work, heavy load, and heavy load in the sense of heavy security, because you need to work and spend a lot of energy producing blocks. It's going to be the base layer, highly secure but not scalable. Then on top, you're going to have the proof of stake systems like Ethereum, maybe one or two others, maybe Polkadot and I don't know, Avalanche or something like that. And then on top, you're going to have the scaling and channel solutions like rollups and Lightning Network and all those things. So the industry is going to be much more integrated. On top of that, you're going to have all the dApps and exchanges and NFTs and all these products. And on top of that, you're going to have the wallets, which are going to be the interfaces for us as humans with our phone to be interacting with all these systems, no? But when I get my phone in the future and I sell to you, say that I have an apartment and it's represented as an NFT, and I sell it to you in the future, I'm gonna press a button or you're gonna press a button and pay, and I'm gonna press a button and transfer you the property of the apartment. Say you pay, no, say $50,000 for it in some cryptocurrency. That dApp is going to be, say, OpenC. OpenC is going to have a real estate section for trading apartments. Or maybe apartments.com by that time is going to have their own market on the blockchain. That is going to very likely go and get executed initially and immediately in a highly scalable channel system like a rollup or something like that, and maybe do a temporary settlement in a proof of stake blockchain like Ethereum or Polkadot or Solana. And then by the end of the day or the next day, there's going to be a big settlement of many transactions of all that money in Ethereum Classic, because Ethereum Classic is going to be the blockchain of final settlement. You're going to have a dApp that is going to be interacting with the wallet, so it needs to have the connections integrated for that wallet, and it's going to have integration with the channel system. The channel system is going to have integration with a proof of stake blockchain, and the proof of stake blockchain is going to, for finality and moving large amounts of money, is going to have a final settlement in a base layer proof of work blockchain. In the end, but today are different silos, are different bubbles. In the future, is going to be much more connected ecosystems.
Yeah, and when you say that, it looks like, a triangle like going up. So you have like the proof of work at the bottom, settling everything, and everything else is scaling up at the top. So you have the more intensive, heavy things at the top, and they all come down to the bottom where they come to the final settlement.
Yeah. Heavy at the top, heavy in the sense that they're going to handle the higher volume transactions and smaller transactions now.
Right. Yeah.
And the base is going to handle less transactions but larger in size. And that's how the banking industry works today. When we use our credit cards or PayPal, those are layer 3 or layer 4 systems.
Right.
When we pay with American Express, Visa, PayPal, etc., those are billions of transactions per day. Then they send that to layer 2, which are the banks. The banks get all those transactions and net them out between their accounts. And then at the end of the day, they know that, for example, Bank of America owes $55 billion of netting transactions to Citibank. Bank of America owes to Citibank $55 billion because of the netting out of all the small transactions.
Mm-hmm.
To move that money, they go to the layer 1, which is the Federal Reserve, the central bank. They both have accounts there, and the Bank of America gives an instruction to the central bank, to the Fed, to move $55 billion to the account of Citibank, and they settle the transaction. So it's 3 big layers, and the blockchain industry is going to work the same way. So in the future, Uniswap is going to have components. It's going to be related from wallets to Uniswap, their dApp, to channels, to proof of stake, to proof of work. They're even going to have accounts in Bitcoin, for example.
Right on. Nice. I guess this is the last question I have is always the community question, is always the one that comes up the most. If I don't ask it, they'll hang me. What are your 2023 price predictions for Ethereum Classic? You can go as long or as short as you want to.
Bueno, as the senior editor of the ETC Cooperative, and the ETC Cooperative don't talk about price. That's why everything I write on a weekly basis and all my videos on the ETC Cooperative website, the ethereumclassic.org website, and on the Ethereum Classic Updates website, which is the one that we support with ETC videos. I don't talk about price. I only talk about price at Etherplan, my own blog and channel. So I'm gonna talk about price as my own opinion. This has nothing to do with the ETC Cooperative.
Oh yeah, everything in this, I always want it to be from your opinion. So yeah, I don't want to pin this on anyone else. So yes, please. I didn't want to stop you. Go ahead.
So when I talk about price, it's Donald. It's not the ETC Cooperative.
Absolutely.
So no, I have exactly the same price targets. As a lot of people know, my price target for ETC was 1,000 by the end of 2021, because we were in the middle of that bull market that was triggered by the Bitcoin halving that was a year earlier in 2020, and then the whole global crisis came, and inflation, and the Federal Reserve and all the central banks of the world had to start raising rates. Interest rates, so everybody started selling stock, crypto, everything, to put their money in cash, in dollars, in euros, and yen. So it basically cut short the bull market at the time, and none of the price targets for Ethereum, Bitcoin, and ETC happened. No, so now that story, we know it. And in 2022, that I thought that the inflation problem was going to be short-lived, and when they raised rates a little bit, it was going to control inflation, at least the inflation that they observed, not the retail inflation and wholesale inflation.
Right.
But it didn't, and today we're still fighting inflation, and the Federal Reserve is still raising rates, and they're very likely going to raise rates by 0.5 point next time. So that has kept the market, Lamos, in check. But I think that the crypto market, especially the proof of work blockchains, who are the ones that are real digital gold, are going to still have the same potential. So it wouldn't surprise me if within 2023 Bitcoin reaches 100,000, 125,000, and ETC reaches 500 to 1,000, say, during 2023. And by 2024, I think it's even more likely, because in 2024 we have the other halving again of Bitcoin, and that moves the whole industry. And ETC is going to be close to its opening also, which is 28 months after April of 2022. So that is 22, 23, 24. Yeah, by the end of 2024.
Into 2024.
So in 2024, both the halving of Bitcoin are going to happen, and the fifthening of ETC is going to happen.
Halving and the fifthening. Oh yeah, that sounds very good.
Halving and fifthening in 2024. So it wouldn't surprise me if during 2023, when the Fed raises rates one more time, I think it's going to be the final time. And when everybody's now is like hiding below a rock, or below a rock, or in a hole in the ground, and when they finish raising rates, everybody's gonna say, "Is it safe now?" And everybody's gonna run to buy Bitcoin, ETC, and other assets as well.
Right.
Potential is still there. The fact that ETC is hanging on at around 20 is amazing, and Bitcoin is hanging around between 20,000 and 24,000 is amazing. I mean, it's so much strength. A lot of people were thinking that ETC was going to go to 8 and Bitcoin was going to go to 10,000 or 6,000 and stuff like that. But this is showing a lot of potential. And in fact, the fact that regulators are so nervous and persecuting the industry, because it's a persecution, no? The fact that they don't, it's incredible because the government wants to kill crypto, and the more they try to kill it, the more they demonstrate to the world how important crypto is. And they're showing it in several gestures. No, one is by not approving the ETF
Yes.
by Grayscale. That is a totally arbitrary, no argument, no reason other than I hate you.
Just it.
And the World Economic Forum gave me the order to kill you. And that's the only thing that I'm going to do. And then they went after Kraken and Coinbase, who did everything right to create their staking pools and everything. They're amazing companies, even though they're centralized exchanges, etc. But they are well run startups, profitable. They provide a good service for all of us to be able to change fiat into cryptocurrencies and things like that. And they want to kill them because it's not that they want to regulate the fact that a mining pool, a staking pool is a security, which is a security. But what they really want is to shut down Kraken. What they want is to shut down Coinbase. Because this week, Gensler, the head of the SEC, not only said anything that is not Bitcoin is a security, which is a threat to the whole industry, but he also announced to financial advisors and investment companies, mutual fund companies, not to use Coinbase or the exchanges as custodians because they are not official registered custodians, allowed custodians in the United States.
Right.
That is, I mean, after we are in 2023 and now you're saying this, when these guys have been existing. Coinbase opened in 2012.
Yeah.
So this is clearly a malicious attack by the government because they hate the industry, and it must be two sources of this attack. One is the World Economic Forum, because the World Economic Forum, they want one global centralized currency to control us. And the other one is the banking industry. The banking industry wants to kill crypto so they take over the industry. They don't want Coinbase to be a staking pool. They want to be the staking pool. In the future, this is why I think that proof of stake is centralized. In the future, it's very likely that Bank of America, Citibank, Wells Fargo, JP Morgan, those are going to be the staking pools in Ethereum and the other blockchains, the other proof of stake networks.
Oh man, I mean, people will still be able to stake there, but they won't have any power because if you can't go against the bank, you're not going to be able to stake as much as the Black Rocks and the Bank of America. It's impossible.
Yeah. It's and they control everything, and they are going to control your coins and how you spend them and all that.
All right.
So, but in terms of price, then I think that it wouldn't surprise me if 2023 we actually get to 1,000 and Bitcoin to 100,000 and all that, because the stock of $22 trillion that is the monetary base that grew from 14 trillion to 22 trillion, it's still there. And all that money is going to go at some point to Bitcoin and ETC and Litecoin and the good coins.
That's right.
And I think that by 2025, 2026, ETC is going to be around 8,000, and by the end of the decade, 2020, 30, 31, 32, is going to be 33,000. And this is because Bitcoin is going to surpass gold in market cap. Gold is about 11, 12 trillion dollars. We still have a long way to go.
Still got some ways to go, but that trajectory is like, you see the chartists and, they show that. I don't know if you see, Plan B is, he always puts a lot of charts out showing the trajectory of Bitcoin. And 10 to 12 years down the road, surpassing gold is going to be something phenomenal. Do you have any final words? Any last things you want to say? Anything else you want to discuss?
I want to thank you very much for this opportunity to talk about all these things, to talk about the article. Yeah, very timely article, and thank you very much. This is a very timely interview to talk about the concept of security and commodity. Clearly, Ethereum is a security because it depends on a centralized group of entities. and ETC is clearly a commodity because there's nothing that is responsible for ETC. It's totally decentralized.
Right on.
And also that the ETC cooperative, we are almost investing a lot in education and explaining and the positioning of Ethereum Classic. We write for the ETC cooperative website and the ethereumclassic.org community website. We put out 3 articles and 3 videos per week with topics like this that have to be timely, important, deep, that explain things in detail. Not like when you go to Forbes or CoinDesk and all that they treat everything lightly, and that when you read them, you can see that the writer doesn't know what they're talking about.
Yeah, you still have questions after you read the articles, so that's a problem. And I found with even Etherplan, I'm gonna lump that into there. I just feel that you just have a gift of explaining this very, very technical field. Cryptocurrencies are new. I'm not a dev. I'm sure most people that watch my videos aren't devs, so it has to be dumbed down to us to try to understand so many things, and I think you do a very fantastic job of doing that. So your average layperson can understand what's going on.
Thank you very much.
Well, thank you. All right, well, thank you guys again for watching, and hope you guys stay frosty out there.
Bye.